Buying real estate can be a daunting task, especially when interest rates are high. However, with careful planning and strategic decision making, you can still navigate the market effectively and secure a property that meets your needs. This guide will provide you with the 10 essential steps to successfully purchase real estate when interest rates are on the higher side. Before diving into the real estate market, take a close look at your financial situation. Evaluate your income, savings, and debts to determine how much you can comfortably afford to spend on a property. Consider factors such as down payment, closing costs, and monthly mortgage payments. High interest rates may impact housing affordability, so it's crucial to research the market thoroughly. Explore different neighborhoods, property types, and price ranges to identify where you can find value despite the high interest rates. Pay attention to market trends and consult with a local real estate professional for insights. With high interest rates, lenders may be more stringent with their lending criteria. To strengthen your position as a buyer, get pre-approved for a mortgage before you start house hunting. This will demonstrate to sellers that you're serious and that you can afford the property. Consider various loan options that may help mitigate the impact of high interest rates. Look into government-backed loans, adjustable rate mortgages, or alternative financing options that offer competitive terms. Compare interest rates, fees, and terms to find the best fit for your financial situation. High interest rates may limit your purchasing power, so it's essential to set realistic expectations. Be prepared to compromise on certain features or amenities to stay within your budget. Prioritize your needs and focus on finding a property that meets your essential criteria. In a high interest rate environment, sellers may be more motivated to negotiate. Use this to your advantage by making reasonable offers and negotiating terms to work in your favor. Be prepared to negotiate on price, contingencies, and closing times to secure the best deal possible. While high interest rates can increase your borrowing costs, they may signal a strong economy and potential for property appreciation in the long run. Evaluate the long-term investment potential of the property you're considering and factor in future market conditions when making your decision. In addition to the purchase price and mortgage payments, consider other costs associated with buying real estate. This may include property taxes, homeowners insurance, maintenance expenses, and potential repairs and renovations. Factor these costs into your budget to ensure you can afford the property over the long term. Before finalizing a purchase, conduct thorough due diligence on the property. This may involve hiring a home inspector to assess the condition of the property, reviewing title documents for any liens or encumbrances, and verifying zoning regulations and property boundaries. Doing your due diligence will help you avoid any unpleasant surprises after closing. Once you negotiate the terms and completed the due diligence, it's time to close the deal. Work closely with your real estate agent, lender, and attorney to ensure a smooth closing process. Review all documents carefully and be prepared to sign the necessary paperwork to finalize the purchase. Purchasing real estate when interest rates are high requires careful planning, research, and negotiating skills. By following these 10 steps and staying informed about the market conditions, you can successfully navigate the challenges of buying real estate in a high-interest environment and secure a property that aligns with your financial goals. If this helped you, do me a favor. Like it, drop a comment with your thoughts or questions, save this post so you can revisit it later, share it with someone who's thinking about buying in this market, and don't forget to subscribe for more no-fluff real estate tips like this.